Okay, welcome to the deep dive. Today, we're going to be plunging into the pretty fascinating world of cryptocurrency price analysis. And we're focusing specifically on Cardano, ADA, as most people know it. Our mission, let's say, for this deep dive is pretty clear. We want to unpack what's happening with ADA's market dynamics right now, explore where the price might be heading, and, really zero in on those key levels that technical analysts are watching so closely.
Exactly. And we'll be breaking down a specific analysis that uses concepts like diagonal structures. These are particular chart patterns that kind of hint at a gradual, maybe trend reversing move,
Okay.
and also Fibonacci levels, which are key price points based on mathematical ratios. They often act as pretty strong support or resistance. So the goal really is to help you understand what all these, let's say, intricate details might mean for ADA's future path.
Right. It sounds like it's all about navigating what this analysis calls a range-bound landscape. So certain price points are going to be really decisive, potentially determining if ADA breaks higher or just keeps consolidating, moving sideways. So let's kick this off. The report we're looking at, it actually notes ADA is currently considered one of the weaker charts. What does that really tell us about how it's been performing lately, especially compared to others? And why is there still a bullish angle here?
Well, yeah, weaker chart basically indicates that, compared to some other assets, ADA hasn't shown the same kind of strength or upward push recently. It's been lagging a bit, you could say.
Mm-hmm.
But what's interesting here is that even with this current weakness, the analysis still sees potential for what they call a diagonal structure. And this structure could potentially lead to higher prices.
Mm.
Kind of think of it like a coiled spring, maybe.
Mm.
Despite the recent weakness, there's a specific chart pattern suggesting there could be significant upside. And they even compare this potential pattern to what's been seen in other cryptos, like Solana and SUI,
Mm.
which showed similar structures. So this potential path, that's what the analysis is calling the orange scenario.
Gotcha. The orange scenario.
Yeah.
Okay, let's unpack that then. What exactly is it and, what's the basis? What are the foundational bits that make it a bullish possibility for ADA?
Right. So the foundation for this bullish read, it really starts with observing what the analysis calls three waves up from the 22nd of June low. Now, in technical analysis, these waves just describe price movements, right?
Yeah.
And seeing three waves up can be a pretty strong initial signal. But while this setup allows for that bullish view, the analysis says it's very limited to a diagonal structure, which means the upward move might be more gradual, maybe less sharp than a big impulsive rally.
Okay, so not necessarily a straight shot up.
Exactly. And then following those three waves up, there was a pullback in potentially wave two, which is typically, a corrective move downwards.
Oh.
Now, crucially, during that pullback, the price reacted to our Fibonacci support zone. It specifically bounced off the 78.6 fib level.
Ah, the golden ratio level.
That's the one, yeah, the golden ratio. It's often seen as a strong potential reversal point based on, well, historical patterns. And after hitting that support, we then saw a nice rally develop, which analysts are looking at as potentially the third wave starting.
So it sounds like the price didn't just follow a pattern, but it found support exactly where you might expect based on these Fibonacci levels, like a little nod from the charts.
Yes, something like that. It adds a bit of weight to the interpretation.
So for this bullish path, this orange scenario to really gain traction, what are the specific targets? And maybe more importantly, what are the absolute non-negotiable conditions that analysts are watching?
Right, validation is key. You're spot on. For this bullish scenario to gain stronger confidence, the bulls, the buyers, really need to achieve three main things. First, and this is critical, they absolutely need to defend the invalidation point for this bullish case.
Okay, the point of no return, so to speak.
Pretty much. It's
Okay.
the price level below which this whole bullish diagonal idea is basically off the table, invalidated.
Yeah.
And that level is specifically at 53.7 cents. As long as the price stays above that 53.7 cents, the diagonal structure is still considered a valid scenario. In the analysis charts, that's marked clearly as where the red line is located.
53.7 cents. Got it. What's the second thing?
Second, the buyers need to drive the price above the 61.62 cent level. This
Okay.
price zone is referred to as a wave high, or sometimes just the green line in this analysis.
Right.
And breaking above that is seen as really, really important for actually breaking out of the current sideways range.
So push past recent highs. And the third thing?
And third, ideally the price should be driven higher in wave C of circle wave 3 towards 66 cents or higher. Now, this 66-cent level is pretty significant. It represents the 138% extension. That's a common target calculated using Fibonacci. And it's considered the first ideal target for a third wave within this kind of pattern.
Okay, so hitting 66 cents would be a pretty big deal then, a strong signal that the orange scenario is playing out.
Definitely.
And if all these things happen, if those milestones are met, what's the sort of ultimate potential upside being suggested here for ADA in this specific scenario?
Well, if we get the full structure, the complete 5 waves overall within this diagonal pattern, the analysis suggests the market might take it to around about 70 cents
For
eventually.
70 cents.
That would essentially be the completion point for this particular bullish diagonal setup they're tracking.
But, it's never quite that simple in markets, is it? Our source also mentions some weaker signals or maybe alternative paths. What else should we be aware of that might, pour a little cold water on this immediate bullish outlook?
That's a fair point. The analysis is quite balanced, actually. It does acknowledge that, looking very recently, it can only identify here a very weak 3-wave rally from the weekend low. So the most recent price action isn't super convincing on its own.
Less immediate punch.
Right. And it also raises the possibility of something called a 1-2 setup. That's another kind of bullish continuation pattern, but it implies maybe a small dip first. And interestingly, they note this setup might align with what Bitcoin is doing. So the idea is that ADN might even fit the bigger picture quite well if it were to maybe dip down and test the swing low here again from Friday, which was around 56 cents.
Okay, so an alternative view where ADA maybe needs to pull back slightly first, perhaps mirroring Bitcoin before potentially moving higher.
Exactly. It's sort of a less direct bullish path, maybe a slight detour first.
So what does all this mean for support right now, especially if we're hoping for that most directly bullish pathway, the orange one? Is there a really critical nearby level to watch?
Absolutely. For that immediate 1-2 setup idea, the analysis points to 56.4 cents as the nearest support, and it states pretty clearly this must hold.
56.4 cents must hold.
Yep. If that level holds, it keeps that more immediate bullish pathway looking viable.
Okay, but what if it doesn't? What are the implications if ADA breaks below 56.4 cents?
Well, if there's a break below 56.4 cents, then that primary orange count will struggle. It makes it less likely.
Yeah.
And in that case, the analysis suggests we could then see the move to 51 cents or lower, basically an extension of the correction that's already been happening.
Oof, okay, so quite a bit lower.
Potentially. However, the report does add a nuance here. It clarifies that any break below 56.4 cents wouldn't be a disaster as long as we're holding above the main invalidation point of the diagonal.
Which was 53.7 cents, the red line.
Exactly, the 53.7 cents level. So breaking 56.4 isn't fatal for the whole diagonal idea immediately, but it does make allowing for an extension of the B wave, meaning a longer, potentially deeper correction, become less probable if there is a break below the Fibonacci support area around 56.4. So basically, while 53.7 cents is the ultimate line in the sand for the diagonal, breaking 56.4 definitely weakens the immediate bullish case and opens the door to more downside risk, making the path back up look harder.
Right. It sounds like there are, lots of levels to watch, as the analysis says, and potentially more range-bound action. So summing it all up, what's the overall feel from this analysis right now? Which way is it leaning, if at all?
Yeah, the overall sentiment, according to this specific analysis, is described as fairly neutral which scenario it is. It admits it's kind of balanced, though it does add it's slightly leaning orange, maybe? Just a slight tilt toward the bullish diagonal?
Yeah, cautious optimism, perhaps?
Perhaps. But it immediately follows up by reiterating that it cannot rule out a wider B wave, which, again, implies more sideways chop or even a deeper correction before any significant move up. So really the key thing to watch going forward is whether the buyers, the bulls, can hold the price above the Friday low, that's around the 56-cent area we discussed, and drive the price here above the green line, which is that 61, 62-cent resistance level.
Right.
Getting above that green line, the analysis says that would really be a statement, positive statement, and would shift probabilities further towards the orange scenario. That's the confirmation they're looking for.
Okay, so we've definitely unpacked a lot of layers there in 80's recent price action. We've gone from these potential diagonal structures, the whole orange scenario, down to these really critical support and resistance levels.
Yeah, and we've seen how these specific technical points, numbers like 53.7 cents, 61 cents, 66 cents, they aren't just random numbers. They act as really crucial markers in the market's ongoing story for 80, guiding how analysts are trying to map out its potential paths.
Absolutely. And As you listening consider this deep dive, it's important to remember just how interconnected all these different levels seem to be. It really is a delicate balance, isn't it?
It is. And, this kind of analysis, it raises a really interesting question for you to think about. In a market that's always moving, always shifting, how much weight do you personally place on these very precise technical milestones, like the ones we discussed, versus maybe the broader market sentiment or, other factors when you're making your own assessments?
That's a great question to ponder. Well, thanks for joining us for this deep dive into Cardano. Keep exploring.